Okay. Hello, everyone. Welcome back to the weekly roundup. My name is Renata. I'm taking over for Scott this week. And Ben, of course, how are you?
Good. How are you?
Good, good. So let's just jump right into it. It was a very busy week in terms of numbers in the economy and like CPI, PPI, ECB rates. Did anything surprise you in those numbers?
So the CPI number was a little bit uh hotter than expected. It's like 10 basis points. I don't think it was material, but it was a little bit more than expected. We saw oil prices kind of go up over the last 6, 8 weeks, so I think probably not to be too surprised about. The market really had a ho-hum reaction from it, so it didn't seem to be much of a change there from CPI. The ECB did rate increase, but their wording changed quite a bit. So they effectively said this is the end of our rate hikes. So that was a pretty material comment. So I'd say that was probably the biggest thing that came out of the kind of the numbers that came over the last few days there.
We also saw that there were job cuts in the US this week. Do you think this was a start to show in the numbers or
Yeah, I mean, certainly the financials, we saw most of them have pretty material layoffs in the US, JP Morgan, Citi, things like that. So do I think it's going to show? I think it should start to show up there, because some of the other things you look at from an employment perspective is you saw less overtime hours, less part-time jobs, and the jobs that are coming through are mostly service-based. So I'd say the better paying jobs certainly are starting to now pop up where people are losing their jobs, and the financials are struggling with keeping the profitability. So yeah, I think we're starting to see that come through in the employment numbers now.
yeah, there was also cuts. China also made cuts to their rates. Was that surprising?
It was a bit of a surprise. I know that the Chinese economy is in slowing, and I think slowing a little bit faster than people had expected. So obviously, they're trying to get going, get the economy stimulated, and getting their numbers a little bit better. They've had some of the big builders have some stress and not being able to raise capital and such. So I think they're cutting numbers in hope that they can stave off some of that slowdown that's happening right now. So yeah, it was a bit of a surprise this week.
In terms of all these numbers and all this information, was there any adjustments made to the portfolios this week?
I'd say from a top level macro, not really. I still have the view that we're slowing where GDP and inflation are slowing. From a micro, smaller position wise, so I bought Amazon around in October, November last year. So I sold that position. It was up about 75% since then. I did that yesterday, so at least so far, it looks like the right decision. It's down about 3 or 4% from where we sold it yesterday. The other company that I don't know if I mentioned it or not last week, but Bristol Myers was one that I was looking at. Quite a few of the consumer staples have really been hit hard. Bristol Myers hit a new 52-week low today, trades at 7 times earnings, almost a 4% dividend yield. So when you look at it versus its peers, it looks quite attractive. So I started to buy that a little bit. But from a bigger picture, I don't think too much has changed. But as these companies start to come down, I'd say, if you got a view of 18 to 36 months, it's a pretty good opportunity to start to buy some of those names. So that's what I did on a kind of smaller micro level this week.
I think we can jump into the charts.
All right, sounds good. Just let me know when it pops up there for you, Renat, and then can mute you out.
Black screen. Okay, there we go. Go ahead.
It's there now. Okay, perfect. Thanks. So as I mentioned, Renat, we were talking earlier. I said it's starting to get the podcast going again, and had recorded the first one today, where I had some good conversations this week. But today I had a conversation with Mark Connors that'll come out in a little while. We have to do some edits and such and get it out there. But one of the things we talked about is just what's happening in the world. We talked about markets. He works for 3iQ, which is a firm that invests in digital assets, but he comes from the traditional side where worked at Credit Suisse and risk management and fixed income and high yield and such. So we were taking a look at numbers just to see where things are so far. And when we look at where we were, so kind of 1 year, Bitcoin is up about 50%. And if we look at some of these other things, you got some of the currencies down pretty hard. If we look at the Japanese yen over the last 3 years, down almost 30%. So I thought it was interesting just to see how the different asset classes have performed so far this year. Just bear with me for a sec. I'm not sure why they all didn't pop up there, but we're going to go with this. So we'd looked at, and this is probably the topic of conversation with everybody I speak to, is what's going on with the housing market in Canada. And so household debt service ratios, this is a serious issue. Because as you know, interest is more than principal at this point. And so you have amortization stretching out across all of the kind of the four banks that have fixed payments that don't float. So that'd be TD, CIBC, RBC, and BMO. So you got this period now where we have rollover risk. So I think this is going to continue to be a topic of conversation as we progress through the kind of the next phase of what's going to happen with the markets in Canada. I'm gonna have to stop this sharing because it looks like for some reason it didn't pick up some of the slides. So we're gonna try this again and see if it works. It's not picking up my slides. Okay. Well, we will have to go with the other route, which is presented in the traditional way. So just bear with me for a minute here. Just let me know when you can see that.
Yeah, we can see that.
Okay, perfect. All right. So there's some of the research that we get internally. This is from MBI. This is our chief investment officer, puts out a research piece. And everyone's got their own analysis for where we are, kind of this risk, extreme pessimism, extreme optimism. I've put this up both for equity markets, bond markets, and for crypto over the years, just to show kind of the different periods. But this is how NBI, our chief investment officer, assesses where we are and what's happening in the market specifically. So if you look at, they have a weighting of momentum, how much momentum. Right now, momentum's actually quite low. Volatility, are we in a positive or negative side? When we got a red volatility, that means volatility is high. Right now we're up into the green box, which is volatility is quite low. So that'd be a counter signal for me, but it seems to be a positive for them. Breadth essentially means how many of the stocks in the index are going up together. As we've talked on and off over the last little while, breadth is quite narrow, so which means that 7 or 8 stocks are driving index returns. That's really not ideal from a long-term perspective. So you get that in the red bucket: risk appetite, speculation, and then surveys, kind of consumer sentiment, market sentiment. Then you can drag this back and they show a period of 2018 till now. So it gives you kind of a thinking around if you are kind of be tactical based on sentiment. If we look at where we were in kind of end of 2022, which is like October, November, which I talked about buying Amazon and a few other of those names at that point, sentiment was super pessimistic or negative. So I love that stuff. That's the time where you want to kind of take the chance and take some opportunities to buy some good companies. So if you look at Bristol Myers, for example, which I mentioned, sentiment's quite negative. Most of the technical indicators are quite bad as well. So you'd get kind of extreme pessimism at that point. And when you're trying to exit things, you're looking for that kind of extreme optimism, which would have been June of this year, we got kind of extreme optimism. Now we're sitting somewhere in the middle, but it really gives you kind of some thinking around like risk reward and timing and such. I thought this was a pretty cool chart. Um, Two more quick ones. So as we get in to look at earnings for Canada and the US, thought this was an interesting way just to look at it as well. So again, when you're looking at the S&P, which is the US, versus TSX, which is the Canadian companies, I think this is a reasonable side-by-side way to look at it and say, for example, if you're looking at something, you say communication sector in both Canada and the US. So you'd look at BC, TELUS, Rogers. In the US, you look at Verizon, AT&T, and such. And so these names actually beat in the most recent with a lower miss number. And in Canada, you had more misses than beats. Again, historically, you'd look at this and say, well, okay, what do I want to do with this? Well, TELUS, for example, has had a lot of trouble this year from a earnings perspective, but if you're buying a stock, that's kind of what you want, is you want something that struggled a little bit. Business hasn't fundamentally changed, just timing hasn't been great. So if they miss earnings, stock tends to come down, present opportunities. So I think this would be an opportunity, for example, where you'd look at maybe I want to buy BC or TELUS versus potentially Verizon, for example. So I thought this was a neat way to look at just kind of the beats and miss and how you think about stock selection. So in my call with Mark today, as I say, he came from a kind of fixed income traditional background, and so one of my main questions to him was what's potentially the risk in the system right now, and he actually worked for Credit Suisse, and Credit Suisse was taken over by UBS, so we had an interesting conversation about that. But I said if there's one thing you'd be watching and people should be watching. He said effectively we should be looking at credit spreads. And so we drew some analogies from history where we saw Lehman Brothers and others like this, where their credit spreads start to widen out. And that's when additional risk starts to come out into the world. And so I say credit spreads, this would be something that we'd pay attention to in both Canada and the US. US shows the line somewhere in this neighborhood around 500, 600 basis points above, and then Canada gains similar, a little bit lower. Or if we get big spread moves where corporates start to get a little bit wider, that'd be a bigger sign that something might break in the system, as well as we got to continue to watch financials right now. But credit spreads was kind of the one thing he said we should be paying attention to. I thought that was interesting. So that's it for the charts today.
Amazing. What can we expect for next week?
So next week is the U.S. Central Bank meeting on rates. Right now, probabilities of a rate increase are extremely low, something less than 10%. However, a couple of people that I follow in the U.S. Today said they wouldn't be surprised to see the U.S. go one more time. But right now, market's pricing in no rate increases, so I'll be watching that closely. Anything outside of the, if they decide to raise rates, I think that'll cause a bit of chaos into the market. So be watching that. Coming into today, there's a lot of options expirations, so that tends to create a little bit more volatility into the markets. As I mentioned, we sold some Amazons. Some of the tech names have had a good run here. So there's probably a bit more risk into US markets coming ahead next week. So I'd be watching that, as well as I continue to watch the bond market quite closely because we have a good position in there, and I want to make sure we continue to be in the right spot.
Any last thoughts?
No, I think those are kind of the main things to be watching at this point, and I think that is really what's going to happen. What's the potential drivers for markets? So I'd be watching that quite closely, and we'll continue to do that.
Well, my last thought is we are booking meetings for the first week of October. So if you do want to meet with Ben, you can contact me and I would be more than happy to schedule a time for you guys to talk about anything necessary. But yeah, I think that's it.
Perfect. Fantastic.
Amazing. Have a great weekend.
You as well. Thanks. Take care, Anad.